Yeah, guys, I welcome you all to this institute. Remember, today is our first day. So I'll be showing you the introduction about Forex trading. So please, for those who don't hear me, I've managed to send something for them here so that they can be able to hear me. And then, guys, this is not a long session, so we have to focus. And then please make sure if you don't understand any part of this session, try to contact me via inbox after the session. But kindly note that this session will be recorded and uploaded via YouTube in case you miss some points. So let's just wait for almost 5 minutes. Let me see. Let me check what time is it. Yeah, guys, we're gonna start by almost 6 past so that people can join and also can be able to fix their mistake because there are some people who can't hear me here. Yeah. So by the way, please, guys, make sure that you pay attention, focus, make sure that you understand everything that I'm going to show you here today. So this session is like proposed to those who are new to Forex, mostly proposed to those who are really new to Forex trading. So let's just pay some attention and wait for some people to come join. Even got 10 past regard Toma or 5 minutes. Yeah, 5 parts is fine because we can't wait for to. Yeah, so guys, I think it's our right time to start. I have given them enough time to join, so we can't keep on waiting for many people to come join later. then it's fine. Those who will miss the session, they will miss. Remember, I need people who are serious here, so they should respect time. I can't wait for people. I can't wait for who don't have such time. So yeah, this is our right time to start, guys. So let me try to share you the screen so that you can be able to see what we're gonna be talking about. Yeah, so guys, okay. Yeah, so guys, welcome to the Institute. This is our first session. So please pay attention, guys. This is how we start learning Forex. Anyone started here, even me, I started here. So guys, at least you are lucky because you had someone to show you and to lead you. So guys, today we'll be doing the introduction to Forex trading. Remember, introduction. So this is where the roots are starting of Forex. So, okay, let's stay tuned. Yeah, I can see many people are still joining, but then we want to wait for them. So guys, so the only thing that you must know before everything comes after is that like what is Forex? What is Forex trading? So in short, here I try to simplify things. Or Forex is just a market. It's a foreign exchange market. So we just trade at the world's currencies in such a way that in Forex trading, we either buy or sell the world's currencies. Remember, a trade, it means buying or selling. So this is what is happening in Forex. We either buy or sell the world's currencies, in short. So if someone asks you what is Forex, you just tell the person it's a market where we sell, we trade the world's currencies. We either buy or sell the world's currencies. You'll know further about what's the currency if you didn't know. So, okay, these are some notes that you can make a screenshot. I can't try to go over this. I was just trying to add up on the definition of Forex. So the important thing in this slide is just that you have to know Forex, it's a market where we sell the world's currencies. All the currencies around the world are available in Forex market. So, okay. So there's some reasons here like why we trade Forex. There are some reasons why we trade Forex. Why Forex? Like there are some reasons that we can regard in Forex trading. Why do we trade Forex? So another thing is like the first option is that Forex never sleeps in such a way we can trade Forex in a week. Okay, trade Forex in a week, in short. And then another option is that like we either buy or sell. So short, long or short is a better of you can either buy or sell. Simple. So another reason it's like low transaction cost. So in these things, guys, that I'm gonna like I wanna explain to you this why low transaction cost. Or like these transactions that we are doing in Forex market via our online platforms. These are the transactions that are done at the airport. When you arrive at a particular country, there is a foreign exchange market where you change or you convert your currency to another world's currency. As for example, if you're going to America, you will be having South African rands, and then at the airport, before you depart from the airport, there is a market where you'll have to convert your rands is from South Africa to the United States dollar. So these transactions that we are trading, or that we are like trying to trade them via our online platforms, are the manual transactions that are done via the airport. Simple like that. So that's why we're saying low transaction costs, because we do them online at any time that we want. So there is this thing we call leverage. You will learn more about leverage, but then you can try to catch up some a short definition what it's a leverage. So leverage is just a mechanism that, okay, my network is unstable, it's unstable. But then here, another thing that is leading us to trade Forex, it's about leverage. And then remember, please take notes that high leverage, guys, it can work on you or it can work against you. So we'll learn more about leverage as we go further. And then another point is that we have high liquidity. In such a way, when we talk about high liquidity, we are trying to refer that in Forex, we have a lot of people trading Forex. Guys, please, man. Who's trying to someone is just trying up to disturb us here. This is what I hate, working with people who are matured. This is what happens. By time out. Okay, guys, let's continue. Guys, please, man, we're all adults here. Let's try to be a bit matured. How can you do such things to disturb others and waste my time? No, let's focus. So, okay, fine. Another thing that I was telling you, why the reason that we're trading Forex is because there is high liquidity. As I was saying, high liquidity, it means like we're having a lot of participants in the market. There are many people trading Forex in the market. There are a lot of transactions that are happening in a daily basis on the Forex market. That's another reason why we trading Forex. No wonder who's the person. Okay, fine, guys. Man, please, man, let's try to make sure when we join the session, we have to mute your mics. I don't want to hear your background voices that side. Okay, fine. Let's continue. Even though they're disturbing us. So another thing, we're having accessibility. This it means we're having a lot of opportunities in the Forex market in such a way that we can choose on either to trade Forex as currencies, or we trade gold as commodities. We'll trade whatever we would like to trade. So this is the other advantage of trading Forex. So you can make a screenshot of these options that I gave you here. These are the advantages why we trade in Forex. Nah? Yeah. So here it starts the game like we are now doing, like the terminologies. What is a currency pair? What is a currency pair? So guys, when it comes to a currency pair, remember when we talk about a pair, we're talking about something that is being combined with another thing. So when we combine two things, they form a pair. So that's why we're having a currency pair. So it's when one currency is compared to another currency, as like USDs are, then we call it a currency pair. Now, so now, as I was saying, for example, let's form a currency pair. We are having a ZAR as our South African rand is regarded as ZAR. Remember, South Africa is ZA, so that's why we're having it as ZAR. So the R stands for the name of the currency as rand. So when we compare our currency to another currency, as like our currency here at South Africa is the South African rand, we compare it to the United States dollar. When we combine them, they now form a currency pair. That's what we call a currency pair. So if we can check this example here, we are having a lot of currency pairs there. Let me try to highlight them so that you can be able to see what I'm talking about. Here, these are our currency pairs. If you check these ones, these are what we call our currency pairs. We are having GPB USD as a currency pair and USD JPY, whatever the list goes like that. So let me repeat that example again. Remember our ZAR is our South African rands. When we compare it to another currency pair, okay, when we compare it to another currency pair, maybe to another currency, sorry for the mistake, maybe let's take, we are combining it to euro. And then when we add these two currencies, they will form a currency pair as what? Euro ZAR. Simple like that. And then this is what we call a currency pair, Euro ZAR. So when we check these ones here, we're having Euro USD. Euro is being compared to the United States dollar USD. So another thing that I will let you know is that the first two alphabets of a currency, it represents the name of the country. So this is South Africa. And then the R that is at the end, or the alphabet that is at the end of those two particular first alphabets, it represents the name of the currency. So this is regarded as a rand. So if, for example, we take USD, let's talk about USD. So this first US here, it's representing the United States. And then this D, the last D, is representing the dollar. Simple like that. So I try to explain what is a currency pair and how it is formed. So let's continue. So in here, guys, we are now going to be introducing you what is a base currency and a code currency. So a base currency, here it is, it's a first currency on the currency pair. And then the code currency is the last currency on the currency pair. Finally, it will make sense when I try to give you an example. So here again, we're having the very same example that we had there. So let's talk about this first currency pair there of GPB USD. Let me try to use this color so that you can be able to see. So in here now, we'll be using GPB USD, GPB, like what? And USD. This is one currency pair. I'm trying to break it down. This is one currency pair. I'm talking about this one here. This is what I'm talking about. And then the thing that I want you to know, guys, this GPB here, the first currency is regarded as our base currency, and then this other one is regarded as our code currency. So if we choose another example here, maybe let's choose another pair here. This first currency is our base currency. It's our base, and then this other last one, it's our code currency. Simple like that. These are the basics of Forex, done and dusted. Now you understand what is a base currency, what is a code currency. And then now we'll be having what we call a cross currency. So a cross currency, guys, is just a pair of currencies traded that does not include USD. Any currency pair that doesn't have USD in it, it's called cross currency. Simple like that. I even gave you an example there, nothing wrong. And then we have a cross code, a code, guys. When we talk about what is a code, I'm talking about something like this. These are the codes, the numbers that you will see on your platform. These are the codes. So the codes of any cross code, a cross currency, it's a cross code. I'll try to explain this again. And then when we talk about quotation, guys, when we talk about quoting something, it's about comparing. When we compare with quote, when you're going maybe for shopping, you are planning to buy a phone, maybe you can't just go in one shop and buy a phone. You'll be like checking a quotation before you buy. that particular phone in maybe 2 different shops or 4. So that's what we call quotation. So simply, even in Forex, we have what we call quotation. It refers to comparing one currency to another currency, as USD, that USD ZAR, whereby like the USD is compared to the ZAR, simple like that. So that's what we call a quote. Don't be surprised. Then let's pass. These are the basics. And then in a currency, guys, here the game begins. We have what we call appreciation and depreciation. So for those who are, remember guys, Forex is about economics, accounting, something like that. Okay guys, so Forex is something that happens. It's the right time for us to continue with our session. Sorry, I couldn't predict that the network might malfunction, but then I think it's now better. So guys, when something it appreciates, it means let me share the screen so that we can be able to continue. It means that that particular something is gaining value, and then when it depreciates, it means that particular something it's losing value. Simple like that. And then here, when we compare the particular codes, whereby if we can check on appreciation, what I hate. Let me remove this person. Guys, if you join this session without muting your okay, guys, I was still here on currency. I was still here on currency appreciation and depreciation. So as I was saying, guys, appreciation is based on something is gaining value. What's wrong? Yeah, guys, let's continue. So I was here on currency appreciation. Never. Okay, as I was trying to explain what is a currency appreciation. So on appreciation, guys, here let's make sure that we understand numbers. We are now going to be doing numbers. Let's say the current code is sitting on the current code is sitting on this amount or this price, and then I mean no man, let me start it to be easy. The last code is sitting currently on this amount, and then yeah, when we compare now, the current code is sitting on this amount or this price. It simply means as we're talking about USD ZAR, meaning or USD ZAR here, or the ZAR itself, it has appreciated in value compared to the USD. Remember here we are comparing USD and the ZAR. Remember we're comparing USD and the ZAR. We are comparing USD and the ZAR. So simply know that every time. So by the time when we check the codes, you can see it's an appreciation. Why? Because like the ZAR gained more value to the USD. By the time on the last code, we were spending 18 rands, 80 something, 86, 30, but we were spending 18 rands, 18 rand something to buy 1 USD. And then when we can check now, we are no longer spending 18 rands, but we are spending 17 rands, 65 something there. So meaning we are spending less to buy 1 USD. Do you understand that? Example, 1 USD, it was costing 18 rand. And then when we check now, 1 USD is costing how much? It's costing 7 rands, 17 rands, I mean. Like this example that I'm trying to show you up. If we check, It was costing 18 rands to buy 1 USD, but now it's now costing how much? 1 USD is costing 17 rand. So this simply means that the South African rands, it's now gained value, like it has appreciated in value. When we talk about a currency gained value, we say it has appreciated. So that's how it goes. So this side is vice versa of this side. So instead of that, by the time we spend to buy 1 USD, we almost spent how much? We spend it on the last quote, we spend it 18 rands. But then when we check now, we are no longer spending 18 rands, but we are spending 19 rands. So we are spending more to buy the United States dollar, whereby we say now the USD ZAR, the ZAR has depreciated. Simple like that. So this simply means we can't say the USD it's more expensive, but then we say what? The ZAR had depreciated in value. When we spend more, it depreciates, but when we spend less, it appreciates. Simple like that. Here are the notes. You can practice the notes on your own. This is for you guys. You can make a screenshot. That's it. So okay, let's push forward. Let's push forward. Then that will come to lot size. There is this thing that we call lot size. So the lot size is simply the number of currency per units. Like these are the units that are being traded. So we simply check here the lots. When we talk about the lots, what are the lots? In the standard account, these are the account types. You'll understand this more as time goes. These are the account size, account types, account types. So meaning one lot on a standard account, it means 100,000 units. Right. So when you go to a trading platform and let's say you want to place a trade, where do you get your lot size? You get it here. You see, this is an example. This is a lot size. This is what I'm talking about. So this part is what we call a lot panel. Like it's where you manage you set your lot size before you place a trade. So you can change this number to any number that you're willing to, but simply know that more lot size, more profit or more loss if the market doesn't favor you. So yeah, you'll understand this when we're doing risk management. So here are still the basics on what is a lot size. Fine. Here, what I was telling you about more lot size, more profit, but also applies in the other hand that more loss if the market doesn't favor you. Simple like that. This is not miracles. So let's check. We are now having a peep. We are now having a peep. So in a peep, guys, I will try to tell you to take a screenshot if you want to understand what's a peep in good condition before I gotta try to explain. Okay, so as we are continuing about a peep, what is a peep? It's a smaller unit of a change in a whatever you call it. This is a definition that we have to know, but not by heart, but be able to know it so that you can be able to tell others. Remember, I love teaching you something that you can be able to teach others. Ne? So when we go to an example, let's do an example on to check how do we calculate a peep. So guys, we are having a bid price. So a bid price is it's all the prices that are on our left hand side. Then the ask prices are the prices that are on our right hand side. So how do we calculate a peep? A peep we simply calculate it by taking someone is drawing on my chart. A peep is the difference between we simply subtract here, and then those numbers that we will get a peep. So I will show you in a chart when you go to open a Forex chart so that you can be able to understand how do we calculate a peep. Guys, stop hey. Stop accessing my platform, guys. You're wasting time, man. Okay, fine. As I was saying, people gonna be able to calculate it when we go to our Forex chart. And then we're having a bid and ask price. Already I've explained what is a bid price and the ask price. Always the bid price is on our left hand side, the ask price is on our right hand side. And then this bid price is simply regarded as our selling price. When you bid something, you sell something. And then this ask price is regarded as a buying price. So this is what you have to know. So ask price is a buying price, sell a bid price is a selling price. Simple like that. Before you even read the definitions there, those are just something to add on an explanation. So, okay, let's check what do we have next. We're having a spread. Okay, fine. So as I repeat here before, we're having a bid price and the ask price. So I want to also introduce you to a spread, or how do we calculate the spread. So a spread, guys, is simply the difference between these two numbers or two prices. The difference between these two numbers or these two prices are called our spread. So how do we get the spread? We simply subtract our number at these numbers, and then we'll get a number that is regarded as our spread. And then this ask price is always above the bid price. Just know that by heart. So our ask price is always above our bid price. So you will simply see how does it affect our spread. So as we're talking about the spread, so the spread is simply the difference between the bid and the ask price that I've already told you about. So this is the spread. When we talk about the spread, we're talking about these two gap, this gap between these two lines. So remember, this red line here, or red price, or the line above, is always our ask price, in case you didn't understand the previous slide. And then this bid price, this below price line, it's our bid price. I think everything is sorted. And then when you subtract then these two numbers, the red number and the blue number here, of those lines, you'll get your spread. So that's how we get your spread. So don't be surprised when you open your chart and see the gap. That's called a spread. So let's check if we have something again. Okay, still we're having something interesting there. We are having our balance. What is a balance? Here's a balance. Balance here, it's a balance. Oh, okay. Let me. So we're having a balance there. What is a balance, guys? A balance is the money that you have managed to deposit from your pocket. If you're using a real account, that's the money that you have managed to deposit from your pocket. That's the money that you are currently having in your trading account, not in your bank account. Remember, you are doing Forex. So credit is the bonus that is given to you by the broker. If that particular broker gives a bonus when you deposit, it's gonna fall under credit. So credit is almost every time the money that is given to you by the broker. If it's 50% deposit bonus, when you deposit 100 rand, the broker will give you 50 rands. That's how it works. And then equity, guys, equity, please make sure equity is the addition of credit equity. Let me simply say it in brackets. You add your balance, you add your credit, you add your running trades, either loss or profit, running trades, and then you'll get your equity. That's how we calculate equity. Let's say now here, my equity is 30 USD as my balance plus my credit as 15 USD. It's where I get my equity of 45 USD. So since I'm not having any running trades there, I can't have more than this in my equity. But let's say, for example, I was having 5 USD profit there, 5 USD. My equity was gonna be 45 plus 5, it was gonna be 50. So that's how I get my equity. So my margin, guys, margin is just the money that is there to protect your trades, like to maintain your trades. So you learn more this when we're doing risk management. Remember, here we're just doing basics. So simple like that, guys. That's how you get your balance, your equity. You simply add your balance plus credit plus also the running trades. Either they're in profit or loss. So let's check what we're doing next there. We're having a stop loss and a take profit. Stop loss and a take profit. So stop loss, guys, simply know that it's a level whereby when you set it on your chart or on your running trades, it will, if the market money to reaches that particular level, the trade will close automatically with a loss. Vice versa. Take profits, it's a level whereby when you set it on your running trades, the market, if it reaches that level, it will close the trade automatically with profit. Simple. So before you place your trade, you're having this portal where you can set your stop loss. Then you're also having this portal you can set your take profit. So you learn more this as we go further on our next session, maybe tomorrow, on how to set your stop loss and take profit. So then now we're having a chart, what we call a Forex chart. This is what we call, many people, they say the graph of the market, hey, the graph of the market, hey, the graph. There is no graph in the market. In Forex, we have a chart. So these things that we see here, we call them a chart. So you learn more what is a chart, more about a chart. So this is what it was, maybe like it's something that you learn every day. You learn something new, something different in this chart. So this is currently representing how the market reacts. So that's why we call it a chart, not a graph. Don't ever text me or say works a monograph here first. No, this is a chart, not a graph. Simple. And then we're having what we call time frames. We're having time frames. So don't be surprised when you see these M1s, M2, M5, M what. These are what we call time frames. These are what we call time frames. So having M1, M5, and then I try to elaborate them here. Or M1 15 minutes. So you find them when you have rotated your phone on your left hand side. And then the secret against this is this. So every time frame that you have selected, simply know that these are the candlesticks, that the things that we are seeing there, we call them our candlesticks. So if you're using a 5 minutes chart, simply know that every candlestick that you see in that particular chart is formed after 5 minutes. If you're using 15 minutes, every candlestick that you see in the chart is representing 15 minutes. If you're using H1, every candlestick that you see in that particular chart is representing 1 hour. Simple like that. So every time frame that you choose there, simply know that it's representing its own time frame. Every candlestick is formed after its own time frame. Then let's check what we have. And then there we're having something that we call bulls and bears. Bulls, what is a bull? A bull, guys, in the market, it's a buyer. In case, to make things simple, a bull in the market, it's a buyer. A bull, it's a buyer. A bear, it's a seller. I'm trying to make things short, so in case you don't understand. So instead of saying bull, you can say buyer. Instead of saying a bear, you can say a seller. So we're having bulls. When we say we're having bulls in the market, it means that we're having buyers in the market. Then when we say we're having bears in the market, we're having sellers. So when we say we have a bullish trend, we're having a buying trend or a buy trend. Simple like that. So these are the terminologies that you have to know in heart or by mind. Don't be confused when we talk about buy or a bear or a bull. We're talking about a buy and sell. So you can take a screenshot in case you missed this, you couldn't understand it, so you can be able to study it on your free time. Let's check the next thing that we're having. We're having market orders, guys. We're having different types of market orders. Market orders, we're talking about trades. We're having types of trades. Let me say trades. Remember here, we are now talking Forex. That's why some other things are a bit more different. So market orders, I'm talking about trades. So we're having two types of trades in the market. We are having same time trades. These are same time trades. The trades that you place them, they open same time. These are same time trades. You click buy, that's a market execution. Same time. You can either buy or sell at the current price. That's a market execution or same time trade. Or we are having late pending orders, whereby we can call them late trades. Simple. You can will to buy at a later price, not at the current price. So that's what we call pending orders. Simple like that. And then let's check what we're having. And then these are the types of our late trades, as our buying or pending limit, pending orders. I mean, we have different types. We have 4 types there: 1, 2, 3, 4 as our buy limit, buy stop. You learn more about this, and then you get them when you want to place your trades. So instead of either using the pending limit orders, you can choose to use one that we call same time. So mostly we are using this one of market execution, where we buy same time or we sell same time. So you learn more about on how to use these pending orders here. So for now, you can just know in heart that we're having the different types of pending orders as buy limit, buy stop, sell limit, sell stops, like that. Even they're all listed here. So let's check what we're using next there. Okay, we're having market analysis. On how do we analyze the market? So we're having 3 types of market analysis. The one that we usually know is the technical analysis. So on technical analysis, guys, it's where we analyze the market on any kind of way that we are able to predict on the chart. We study the chart. So studying the chart, it falls under technical analysis. It's where we study the market on how it performs by studying the chart. So for now you know what is a chart, not the graph, but the chart. And then the second way, we're having the sentimental analysis, whereby you study the market performance. You don't have to use the chart, you just use the number of the people in the market. So you learn more about this. Finally, we have the fundamental analysis, whereby you don't even analyze the chart, mostly just analyze the news that are released by the banks. So you can be able to make decisions on either to buy or sell by analyzing the news or the stats that it's released by the different types of economists. So these are the 3 types of market analysis. When we try to analyze the market, you can choose to use any of the one, but the most one that is used here is technical analysis and fundamental analysis. So yeah, So you learn more about these guys. These are just the basics. So guys, remember I'm having this ebook whereby everything that I was sharing with you here is there in the book, and then I'll try to share you this book. It's even uploaded via the Telegram. So now I'm gonna be opening my I'll be opening a chart, like a platform, a trading platform, and try to link whatever I was showing you via the chat, the platform. Ne? So let's stay tuned and let me share you the chat, guys. Let me show you the platform. I mean, okay, where's the platform? New share. New share. Where's the platform? Where's the platform? What is the platform? So guys, I think you are able to see everything that is in here. This is what we call the Forex platform, a trading platform. So the market is open. That's why we're having our prices flashing that side. So let's try to link. Let's try to be fast here because we are now linking. Here's the bid price, the things that I was showing you that side. Here's the bid price. Here's the ask price. Those are the ask prices. And then remember the bid price is the selling price. And then the ask price is the buying price. And then the symbol, these are the currency pairs there. You know what's a currency pair, how it's formed. And then here, let me erase everything. And then here we are having our time frames. Remember, I'm using a PC, so it's more a bit different from your phone. So tomorrow, as our session will be on how to use this trading platform, I'll be showing you. So here are the time frames that I was telling you about: 1 minute, 5 minutes, whatever, 15 minutes, whatever there. And then if you can check the magic. Remember, this is a chart of Euro GBP. Now we are currently in 1 minute. So let me click to 5 minutes. 5 minutes. Leona, the chart is even changing. Leona, it changed. If we click 1 hour, again it changed. So remember the rules. As now I've opened 1 hour. 1 hour. 1 hour. Every candlestick here that I'm seeing, these are our candlesticks. We're having green and red candles. So these are our candlesticks there. So every candlestick here, every candlestick that you are seeing there, since I'm using an hourly chart, they are representing 1 hour. Every candlestick is formed after 1 hour. A 1 hour, if I more, a new candlestick will be formed. Simple like that. So a thing that I will share you, red candles, they represent sellers. They represent sellers, or they can also call as a bear candle. Remember, everywhere there is a sell, you can replace it as a bear. And then green candle is showing buyers. So Forex is a matter of vice versa. If not green, red. If not buy, sell. And then this shows buyers. And then remember, when there is buyers, we can also regard it as bulls, as a bull. So simple like that. So now we try to link most of the things. And then let's say maybe I want to place a trade, I place new order. I want to show you the lot size panel where I will have to set my lot size. I will leave the thing is misbehaving. New order. Okay, let me open in your order here. It's behaving. I wanted to show you how it will look like. Okay, since I'm using a PC, it's more advanced. Here it's my lot size, so I can be able to set my lot size here, and then I can be able to either click buy if I'm sell if I'm willing to sell, or buy if I'm willing to buy. Simple like that. And then this is my bid price, and then this is my ask price that I'm seeing here. Always my ask price will be above than the bid price. So guys, I really appreciate your presence in this session. This was our first session. I'll try to merge this session and also the first one. So let me explain again here. The volume, it's the lot size, and then it's here where I can set my stop loss, then my take profit. Then if I'm willing to use pending orders, I can come and click here for pending orders, check what's going to happen. Here my pending orders, and then the different types of pending orders I'm having. So yeah, so guys, I try to link all the things that we're doing there, but more things will be learned from tomorrow because these were the basics. So guys, I really appreciate your presence to our first session of the day. This is our journey to the free course. I will try by all means to make this video and upload it to our Telegram and YouTube channel. So in case you didn't understand or you got lost somewhere, you can feel free to ask me inbox, to meet me inbox, and try by all means to share, to ask wherever you want to ask. So I will share also this slides that I was using via the Telegram channel. So guys, let's meet tomorrow again, same place, same time, 8 o'clock, and then we learn more. I really appreciate your presence, guys. Keep it up. But I'm still willing to see more people attending tomorrow than today. So yeah, this is where we end our session. So if you're having a question, feel free to ask me via inbox, via WhatsApp. Good luck, guys. Have a nice night.